To buy a REIT or to not buy a REIT? That is the question. A REIT by any other name is still a REIT. REIT, parting is such sweet sorrow. Wait, this is not the Shakespeare channel. Welcome to VectorVest channel. My name is Glenn Tompkins. This is all about, is it the right time to buy a REIT right now, which is a real estate investment trust. And we're going to go through the pros, the cons, and understanding of what a REIT is. And I'm going to give you some REIT opportunities that you may or may not want to take advantage of. So let's get right into it. Let's talk about what is a REIT. It's a real estate investment fund. It's a company that owns, operates, or finances income-generating real estate, such as hospitals, grocery stores, shopping malls, cell towers, casinos, storage units. That's right, storage units are part of REITs as well. It's modeled after mutual funds. REITs pool the capital of numerous investors that make it possible for individual investors to earn dividends from real estate investments without having to buy, manage, or finance any properties themselves. You'll see a lot of people out there tell you that the best investments out there are real estate. So do you want to actually go and buy real estate? Do you have the money to go out and really buy real estate? And if you don't, a REIT may be a better way for you to take advantage of real estate opportunities. Now, let's talk about the pros of buying a REIT. REITs may not be affected by other market forces. So like if tech stocks are going down or if other industries are going down or up, the REITs are in a world by themselves that can be affected by another thing that we'll talk about, but may not be affected by other market forces. Property versus a REIT. So here we go. Selling a property is not quick liquidity. You go to sell a property, it goes through a process. You got to wait. There's money in escrow, blah, 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 before you finally get your money. But REITs trade like stocks, and the money is easily obtained as soon as you sell that REIT. Now, another pro of buying a REIT is the dividends. Why? Because REITs are required to distribute 90% of its income to the shareholders. Now, we're going to talk a little bit more about that in a second because there is a downside to the whole dividend play. Let's talk about the cons of buying a REIT. It's affected by interest rates. That's the big thing right now. Interest rates are rising. REITs are under a lot of selling pressure because of rising interest rates. Remember back in the housing bubble when REITs got killed, but then when we started lowering the interest rates and putting money back into the economy, REITs took off, right? Because lower interest rates. Now, when we talk about interest rates and where we are right now, that makes it tough for me to say that it's okay to buy a REIT right now, but I'm going to try to walk you through the process of knowing when the right time it is to buy a REIT. Now, another con is the taxes on the dividends. You know something, you've heard it said more than once. If you got to pay the tax man while you're investing, that's not altogether a bad thing. But in this case, it may be, because if you're paying taxes in a not a tax sheltered account, it may bump you up to the next tax bracket where now you're paying a higher tax rate. So, quick tip, hold REITs in a tax advantage account like a 401k. Now, another con, a lot of people chase dividend yields, knowing that these companies have to pay a dividend. 90% of their income have to be in a dividend. Don't get caught up in the dividend yield. We've got a way to protect you against that. If it looks too good to be true, it probably is. And then another thing, you always want to consider the diversity or the diversification by looking at a REIT ETF over an individual REIT. Now, the question is, should we buy now? Let us take a look at it in the VectorVest software. So as I bring up the software, I'm going to go to the industry viewer. And this is a great way to understand when it's the right time to buy into a REIT. Notice by industry, I've got it sorted alphabetically. So I'm going to go down to real estate mortgage or real estate equity. Real estate equity has got a lot more movement. So I'm going to double click on that. Actually, I don't want to double click yet. I want to right click on real estate equity, and I want to go view the industry graph. This is going to give me some insight on whether or not it's the right time to buy a REIT. Now, I've seen a lot of comments on either the YouTube channel or people asking, why don't you guys ever talk about REITs? Well, I'm going to show you why we haven't been talking about it recently. I'm going to put this on a 10-year graph. All right. Now, it's going to take a moment for the graph. Well, it took a little quicker than I thought it was going to pop up. Now, notice that when interest rates were low back in 2000, after the housing bubble, we lowered interest rates, REITs took off. Boom. REITs, or these real estate investment trusts, will rise. And this was back in 2013, 2014. Now, you'll notice that for the next few years, this whole space moved to the side. Then we had COVID. Boom. That got hit hard. After COVID, we started putting money back into the economy. Look at that. REITs took off, but still got to a level overall as an industry to $64.28. We haven't been able to get past that level since about 2013. So are there buying opportunities coming off of levels of lows? Absolutely they are. And with the VectorVest subscription, you can be able to time this industry to know when to get in. Here we are right now coming off a level of support. Let's go put this on a 1-year graph, coming off a level of support. But again, with higher interest rates, this market has been decimated, but trading in a channel. For the shorter term investors looking at REITs, you can play the bounces off support and the 3-8 cross and the retracements from resistance, 3-8 cross, back and forth, back and forth. So short term, can you play REITs? The answer to that is yes. But long term, I'm not on board with playing it because it's still overall in a downtrend. So now we've looked at the VectorVest system to understand, is it the right time to play REITs? Long-term, no. Short-term, you can make some short-term gains. Now that we've done that, now let's go to my watch list viewer. I've got some watch lists set up for you from a stock perspective, REIT stock. Now I'm going to come to that real quick. How did I get to these stocks? These are my REIT stocks, individuals. Let's click on auto fit. My individual stocks to take advantage of REITs. All right, the real estate investment trust. I wanted to make sure that the RVs were above 1. These do have good upside potential. You can play it when the industry or these individual stocks come off a level of support. The safeties are not there. So what that means, relative value above 1, relative safety below 1, that these are more aggressive plays. No CIs above 1, but they all have VSTs above 1. Let's talk about the dividends, right? One thing that I wanted to make sure, knowing that they have to pay dividends, we have an indicator called dividend safety, cast on a scale between 0 and 99. Above 50, these stocks' dividends should be pretty safe. So I wanted to find good, safe dividends for you, earnings that were positive and earnings growth rate in double digits. So these are my list of individual stocks, REIT stocks to take advantage of. Now, to do that, I'm going back to the industry viewer. To do that, how did I get to those stocks? I'm going to show you the thinking behind it. Let's go to real estate equity. I'm going to double click. In this industry, we had 141 stocks. That's a lot of stocks to choose from. So what did I do? The first thing I did was try to sort by CI. But when I did that, I didn't find a lot of good, comfortable stocks with relative values and relative safeties above 1. So these stocks, for the most part, became a lot more speculative than not. So then what did I do? I used that dividend safety, sorted by dividend safety, to find the safest paying dividend REITs to take advantage of. I went through the list then to find the best earnings growth rate on these stocks, preferably with RVs above 1. So I sort of kind of cherry picked through the 141 to come up with the 5 REITs that I have for you. Let's go back to the watch list viewer, go to my stocks. Again, here's a listing of those stocks. I wanted to take you through the thought process on how I got there. I love the earnings growth rates. all positive earnings, relative values above one. For the most parts, they are all in an uptrend right now. You still need to use some semblance of moving averages of time or timing to get into these stocks. These stocks are volatile in that the CIs, for the most part, are below the value of one. Thus, the reason why I say if you're going to trade these, that these are short-term plays at this time. So now I wanted to take it a step further. To diversify and be more liquid in your trades, why not take advantage of the exchange traded funds? Now I've got I've got seven ETF REITs that I want you to keep your eyes on. Because they're ETFs, relative values and relative safeties are both going to be above one. Price and value, they're going to all be equal. Notice that every single one is in an uptrend right now. Again, CI's not above one. So again, a little bit more volatile in the play. But look at this. Dividend safeties, all above 50. I do like that, especially knowing that they pay dividends. Let me break down on what some of these do for you. VNQ, let me highlight that. VNQ is the biggest one in here. It's about $31 billion in assets, 6 million shares traded on a daily basis, and it tracks 160 stocks. XLRE is about $4 billion in assets, about 30 or so stocks. SCCH or SCHH, $6 billion in assets, about 130 stocks. REM is the only one on here which specifically looks at REITs, but from a mortgage perspective. REM is about $550 million in assets, but it's got a huge dividend yield. Remember I said don't chase the yield? Look at the dividend yield, 10.49, and with a safety of 58. That caught my attention in a big way. Big dividend yield, but having the dividend safety to back up that I do like this play. And in the list, this is my only one that's specifically looking at mortgages. SRET, about 250 million in total assets. This is a global X account. And SRVR, $600 million in assets. And this is a little different. This one is looking at modern digital economy from a REIT perspective. So folks, this is what it's all about. You wanted to know more about REITs and if it's the right time to buy, and utilizing the VectorVest system to analyze REITs. This is what I could bring to the table for you. Hopefully you liked the video. If you did, don't forget to hit the like button. If this is your first time here, don't forget to hit the subscribe button, hit the bell icon so that you'll be alerted to when content like this comes out, because we appreciate you as a subscriber to the channel. Folks, that's the end of this video. It is over. And until the next time, see ya. Hey VV Nation, our next free VectorVest portfolio challenge is about to kick off. Folks, you want to learn how to remove bad stocks from your portfolio and know which are the best stocks to buy, and better yet, to know when to buy them? Let me break it down for you real quick. We're going to teach you how to become an expert at stock analysis. We're going to help you to know when to sell and weed out the bad stocks from your portfolio. We're going to teach you when to buy and put the probability on your side. We're going to help you to know what to buy and how to cherry pick great candidates. And one last thing, to simplify your day with a 10-minute management plan. Folks, you don't want to miss this. It is free. Go to www.vectorvest.com/PC, and you want to do it now.